Welcome to the Wall Street Crossover Show. I'm joined, as usual, with Darren Sinden, who's market commentator at Admiral Markets. How are you today?
Very well, thank you, Zach.
Not as well, probably more feeling in a better position than the stock market at the moment.
Yep, another down day, all driven by fears about Greece, and obviously every day that goes by, we get ever closer to some meaningful repayment deadlines, and we don't seem to be any closer to a resolution or a deal of any sort.
But is there surprise that this wasn't already in the price? This sort of the final default and exit or Grexit?
I suspect that most sort of money managers and investors believe that the one side or the other would cave in before now and the deal would be done, or there'd be some accommodation they'd meet in the middle. The EU saved them 2-3 times before. I imagine that most investors were thinking they'd do the same again. They may yet, of course, but as we get ever closer,
but a dip to buy into is you've got to be really brave for this one.
Yeah, I think the trend's your friend at the moment, and I wouldn't oppose it for just at the minute.
Okay, let's see what's going on today on the markets.
Okay, in terms of data today in Europe, quite a lot of, in fact, loads of inflation data. I've just picked out a few data points to look at. So first of all, in the UK, I've gone here just for the headline CPI, Consumer Price Index. This was for May, and we look at the year-on-year figure first of all, up 0.1% versus the forecast of 0.1%, so dead in line. And as far as the month-on-month forecast or figure was concerned, up 0.2% against the forecast of 0.2%, so dead in line, but miles from the Bank of England's 2% inflation target. And then in Germany, the HICP measure, this is the measure that the ECB prefers of inflation, and so again it's the May data. First of all, the year-on-year figure up 0.7% was the result. The forecast was indeed up plus 0.7%. Month-on-month, we got a figure of plus 0.1% against a forecast of plus 0.1%. So again in line. I guess the encouraging thing is that the year-on-year figure is a positive number, and it's perhaps a bit closer to 1% than it is to 0, but nonetheless it's hardly enthralling, and it also again is well below the ECB's own target of a 2% inflation rate. Then we had another figure that would have a bit of interest to the ECB and to a lot of people around Europe, and that was the change in employment, and this is for Q1. Again, hardly great reading. Came in at plus 0.1%. In line with the forecast of plus 0.1%, but it's pretty cold comfort for the 11.5% or so of European.
Yeah, so the QE might have stabilised GDP, but it's not doing anything for unemployment.
No, and I think the truth is that the employment situation in Europe is a lot more about structure than the actual health of the underlying economy. Yeah. And then the final piece of Eurozone data, which won't have gone down very well, I doubt, in Frankfurt, the ZEW Economic Sentiment Survey for June for the whole Eurozone, a reading of 53.7 against the forecast of 60.3.
A disaster, basically.
Yeah, and the prior read of 61.2, so nobody saw that coming.
So that could have knocked the market on its own, even without the Greece situation?
Yes, potentially it could. I think the Greek situation is probably why the economic sentiment's turned around. Yeah. But yeah, it's a bit self-feeling, but nonetheless it just shows you what investors are feeling. I don't
think I've seen such a big miss in any metric.
I had to check it in 3 places just to make sure it wasn't wrong, but no, it's the correct figure.
Yeah.
Okay, so if we move on to FTSE 100 movers, first up we've got IAG, the owner of British Airways and Iberia, down around 2.7%. Very much negative sentiment in the airline sector at the minute. We saw a downgrade for EasyJet earlier in the week. Air France KLM sharply lower in Paris today, down around 4.4% as they've cut routes to try and save money. And I guess investors will be thinking now, is this the best time to be consolidating in the airline industry, and will IAG end up overpaying for Aer Lingus? They sort of tabled £1 billion bid, but I wonder if they want to try and trim that price.
Or maybe they underpaid for Iberia so they could overpay for Aer Lingus.
Possibly, but it's a very difficult space at the moment, and it's ironic that this should all be happening at the same time as the Paris Air Show is going on and people are placing orders for new planes. And then GlaxoSmithKline, our other featured stock today, they're up just under 1%, around 1362. Press speculation about a possible bid or approach from either Roche of Switzerland or J&J Johnson & Johnson of the US. The talk in the press was of a $19 £1 a share bid. Obviously a significant premium to the current level. Interestingly though, the story suggested that would come later in the year. So whether there's how much truth there is to that, I don't know. Perhaps it's one to watch rather than...
Well, the price is right.
Well, the price is right, but it does not reflect in the
share. No, I mean the price is right in the sense that makes sense, and presumably also Roche or J&J buying would make sense as well. Well, probably more Roche than J&J, but anyway, that's it. Sort of cheers us up on a dull day, I suppose.
It does, and it's one to keep on your watch list, for any future news or movement. So, if we move on, so. One M&A rumour leads to a more substantial one. We're back to the healthcare insurance space in the US, and Anthem, ANTM is the ticker there in the US, approached Cigna, CI is the ticker there in the US yesterday. Anthem said to have offered $175 per share for its rival healthcare insurer, but apparently have been rejected thus far. Turns out the talks may have been going on for some weeks, perhaps even some months, and sources have said that Anthem has made 2 offers in the last 10 days, that $175 offer being the latest of those. It's not a surprise, perhaps, that there should be consolidation in this sector, because Humana, one of their peers, effectively put itself up for sale at the end of May when it engaged Goldman Sachs, I believe, to consider its options, and its own shares leapt 19% on that report. What's interesting is that Cigna, the potential bid target here, was one of the companies alongside Aetna that was muted as a buyer, as a buyer for Humana. And there are at least 5 firms in this sector, which is around 473 billion market cap, seen as being ripe for consolidation because of all the changes that are happening in the American healthcare system. So I suspect this is the first of a number of potential deals. And
at least it's a sort of a non-stock. I mean, it's not affected by the bad sentiment in the stock market as a whole. It seems
no. I mean, no. This is all about structural changes in the American healthcare system that have been, going on for the last 3 or 4 years.
More immune to the Greek and other economic worries.
All domestic facing, and all really about changes brought on by Obamacare and the need for scale in that market.
Let's go for US data points.
Quite a slow day today, but we've got obviously things will quicken up from tomorrow onwards. So we've got housing starts for May. 2 numbers within this. We've got the actual starts number, looking for a forecast of or a number of just over 1 million new homes, 1.09 million in fact, against the prior 1.13 million. And then in terms of permits, forecast of 1.105 million versus the prior 1.143 million. The difference, just in case anybody's interested, starts actually what it says when they actually break the ground and put some bricks there. Permits permission to actually do that at some time in the future. And then the other major event is the FOMC meeting begins. No comments or anything from them till tomorrow, but we've got an interest rate decision at 2:30.
Some jitters there, or is that?
Yeah, yes. Although I think people are becoming more. I mean, there's still a big crowd of people looking at September, but I think more people are coming around to my way of thinking that it's December or, in fact, early 2016. But especially with the weaker data we saw this week, so we'll see what happens on Wednesday.
Okay, the pre-market movers in the US.
Well, these things are often coincidental, but we look at 2 pharmaceutical companies, both of which are engaged in trying to create drugs for eye disorders. The first one is Erie Pharmaceuticals, AERI, the ticker there. They were up 50.7 pre-market, and the news basically was that the FDA has allowed them to make modifications to the dosage of an anti-eye pressure drug called Repressor, and that's been perceived to be particularly good news. Whereas their rival Avalanche Bio, AAVL, or their peer perhaps Avalanche Bio I should say, are down 48%, and the reason for that quite straightforward. They had poor phase 2A test results on their anti-macular degeneration drug.
So equal and opposite, basically.
Yeah, and it just shows you what a sort of a binary thing the drug development business can be. And in terms of levels to watch today, obviously European equities easier this morning, so we're now at 66.50 on the downside in the FTSE, plays 67.10 to the upside. For the DAX, I've gone with 10,800, plays 10,940. Interestingly, both of these markets have bounced off the lows as we approached lunchtime. For the S&P, I've got 2072 plays 2091 in there at the moment. That's a bit of a tighter range. And for the Dow, 17,690 plays 17,850.
But the S&P seems to have outperformed a little there compared to the other benchmarks.
Yeah, I think,
especially the Europeans, obviously. But
yeah, I think it's a bit more of a resilient index, and a bit more introspective, if you like, rather than so external. Plus, of course, it's an index of 500 stocks as opposed to the others, which are 130 and 30 respectively. In terms of the currencies, the euro's better again, 112.26 now our downside level to watch, and 112.95 to the upside. Surprising how well the euro's held up given the shenanigans and lack of events in Greece. Aussie dollar, US dollar, 77.30 plays 77.55, so we've managed to tighten that one up since yesterday. Same sort of story in dollar yen, 123.30 now is our downside level, plays 123.80. Yen weakness seems to have been put on pause again for the moment. And in cable, 155.44 is our downside level, playing a slightly better 156.20 on the upside.
Okay, Darren Sinden, market commentator, Admiral Markets. Thank you for your contribution to the Wall Street crossover show. I think you've done most of it, really, haven't you? And we'll be back again this time tomorrow.